Hello everyone, welcome. My name's Andrew, and I'm a third year medical student currently. I'm going to talk to you today about credit and why it's important for medical school and beyond in your career. So let's go ahead and let me get changed out of these scrubs real quick. They're looking a little bit rubbish for this video, so let me just go ahead and that's better. All right, let's go ahead and roll the intro. So a logical place to start in our discussion is to explain what credit is. So credit is basically, think of it as a report card for your adulthood. So you had report cards growing up, all through school. This is no different. This is just how you handle your money. Your credit score is used anytime you apply for money, loans, mortgages, etc. And this helps to determine your interest rate and how much money that you're going to owe the banks on top of what you would already owe them. So credit is on a scale from 0 to 850. 850 is a perfect score, considered a perfect score. 0 is no credit at all. Most people fall somewhere in the 600s to 800s, depending on how well you've handled your credit. You really want to be somewhere 740 and above in order to get the best rates on your mortgages and anytime you go to refinance student loans or if you're getting a car or something of that nature. Having a high credit score is going to save you thousands of dollars over the course of your lifetime, if not hundreds of thousands of dollars, especially when you take into account the average medical student graduates with $200,000 in debt, and refinancing could lower your interest rate by upwards of 3 to 4%, which over 30 years of repayment is going to be potentially $100,000 or more. So although credit might not be the flashiest topic in the world, it is very important for you moving forward in your medical career. So how is credit calculated? There are 5 different metrics that credit companies use in order to gauge your credit score. The first category that we're going to talk about is your on-time payment history. This makes up 35% of your total credit score. Your on-time payment history is shown as a percentage from 0 to 100, with 100% being the maximum that you can get. So my recommendations for this category are to always pay your bills on time. If you ever miss a payment, this goes in and can drastically affect your score. For example, you need a 99 to 100% payment history to keep your credit score as high as possible. So for example, if you have 200 total payments, let's say you have 2 credit cards and you each have 100 months, 100 payments worth of credit on those cards, and you miss one payment, that's 199 out of 200 payments completed. That is a 99.5% payment history, which according to Credit Karma is actually pretty good. But you can see how missing even one payment can drastically affect your score. Build the number of payments that you have by building the number of credit cards, the number of bills that you have in your name, in order to dilute out any potential payments that you may miss. Moving on to the second aspect that credit companies use, the metric is called credit utilization. This makes up 30% of your total credit score. So basically how this works is you have a ratio of your available credit to your credit taken out. So for example, let's say you have $5,000 in available credit on your credit cards, and you're currently using $2,500 of that. That would be a 50% credit utilization rate. So again, it's shown as a percentage. You want to keep this percentage under 10% if possible. So in the example given earlier, the credit utilization was 50%. That's way too high and will negatively impact your credit score. To use myself as an example, I currently have $34,000 worth of available credit to me. The benefit of that is that if I go and spend $1,000, it's not going to send my utilization rate above the 10%, which is not negatively going to impact my credit score. So basically what I'm saying is you want to have as much available credit as possible to be able to dilute out any possible purchases that you may want to make. My advice for this category would be to increase your amount of credit available through applying for more credit cards, as well as periodically asking for credit limit increases on your cards. The third aspect of your credit score that credit companies use to judge your credit is the length of your credit, which is an average of all your accounts. This accounts for 15% of your score. So let's say that your oldest account is 4 years old, and then you open a credit card today. That would mean that your average length of credit would actually be 2 years. It's not based off your oldest account. According to Credit Karma, you want this to be at least 9 years. You want to have at least 9 years of credit history, which is really hard to do. So my advice for this category would be to start as early as possible and never close old accounts. If you have an old credit card that you don't really use, just make sure you use it once every 6 months for a small purchase, just to keep the account active. Another option would be to set a credit card that you don't use very much up on auto pay with a small bill. For example, Spotify or YouTube Premium or some small charge of that nature. So basically what this would do is keep your credit card account open, and it would relieve you from having to think about the account because it's set up on auto pay. The fourth metric used in determining your credit score is called the total credit line. So this is 10% of your total score. Basically what this means is you want as many credit lines as possible. The more credit lines you have, the better. This includes mortgages, your student loans, which is important, all your credit cards. Basically what this does is when you have more credit lines, this shows that you're better with money, and this makes them more likely to lend you money if you go to apply for it. According to Credit Karma, you want 21 or more lines of credit. I understand that this seems like a really large goal, but if you work towards it, for example, I only have 9 currently, but my credit score is still in the 730s. It just takes time to build this amount of credit. The fifth and final metric that companies use to determine your credit score is the number of hard inquiries that you have. This makes up 10% of your score. So what is a hard inquiry? Basically, whenever you apply for a loan or a credit card or something of that nature, then the companies will perform what's called a hard inquiry, which means that they'll go and check your credit and they'll pull your credit history. And this shows up on your credit report as a hard inquiry. This negatively impacts your score. You want to keep this as low as possible to 2 or less hard inquiries over the past 2 years. For me, I've been applying for a bunch of credit cards recently, so that's why my number's a little bit higher. The reason I've been doing this is to increase my credit amount, that way that my utilization is lower and my credit will actually be higher. One thing to note about hard inquiries is that they stay on your credit report for 2 years, but their effects tend to fade over about 3 to 4 months. You'll see a 10 to 15 point drop during the first month or so that you have the hard inquiry, but then your score will go right back up. One final point to mention about what's factored into your credit is called a derogatory mark. So a derogatory mark is basically anytime you have a bankruptcy, go to collections for not paying bills for an extended period of time, you have tax liens or a civil judgment against you, this will show up on your credit report and it will negatively impact your score. As far as I'm aware, it's not a percentage of your score, but derogatory marks do drastically decrease your score, and they actually stay on your credit report for a minimum of 7 years, so it's just best to avoid these altogether if at all possible. That's a little bit more of a bit of bonus information for you. So just to give you a real life example, I'm going to pull up my Credit Karma account that has all of my credit information on it and let you look at that. Feel free to pause the video if you need to look at this different information. Again, I don't have the best credit score in the world, but my credit score is pretty good considering where I'm at in life currently in medical school. Just keep in mind that you can easily do this as well if you just follow some of the tips and tricks in this video. So I'm just going to wrap things up by giving some of my final recommendations for you. So first off, I would recommend that you download an app to check your credit. I personally use Credit Karma as mentioned throughout this video, but you can use whatever app you feel free. There are all kinds of banks that offer this. Discover Bank, there's creditsesame.com. Just pick whichever one works for you. Like I said, there's all kinds of free options, so there's no need to pay for this service. Also, once you download the app, I would advise checking your credit score about once a month or so. You don't want to become too obsessed with your score to the point to where it controls your day-to-day life and you check it every day. It only updates about once a week or so, so you really don't need to check it super often. You do need to keep a check on it though in case it was to take a drastic turn down. Then you can adjust course and take steps to increase your score back to its previous level. Keep in mind that throughout this video, I'm assuming that you're the kind of person that's good with money and that if you get a credit card, you're not just going to waste your money unnecessarily. If you're that kind of person, then you really shouldn't be getting credit cards in the first place. If you can handle yourself with money, then I would definitely recommend applying for new credit cards because, as in my case, I applied for new credit cards to increase my credit availability, increase my credit line. That way, if I have a $1,000 expense, then it's not going to impact my credit utilization, which will not drop my score. And also, applying for new credit cards through different companies increases your total number of credit lines, which also increases your credit score. So it's a win-win, assuming that you can handle yourself with a credit card and not dig yourself into a hole of debt. If you're just starting out and you've been denied for a credit card because your credit score is too low, I would suggest getting what's called a secured credit card. A secured credit card is the bank's way of giving you credit while leveraging their risk. So whenever you go to apply for a secured credit card, the bank is going to have you put down a deposit for whatever the amount of credit that they're going to give you. So for example, if you get a $500 credit limit credit card, they're going to have you give them $500. as leverage. That way, if you default on the credit card and can't pay it back, they have the $500 up front. This is a great way to start out. It's easy to go and apply for these cards at any bank. It will really help you get your credit score on the uptick. That way you can apply for credit cards that aren't secured. But again, this is just if you're starting out. I'm assuming that most everybody watching this video has some credit history and can go and apply for regular credit cards. But if not, there you go. Assuming you follow all the steps in this video and are able to increase your credit score, by the time you're ready to apply to residency, you're going to be in a good spot to apply for any potential housing as far as mortgages, car loans, refinancing your student loans. It's going to set you up in a much better situation. That way you can save more money in the long run. And it's only by putting in a little bit of effort now with the tips that I mentioned in the video. With that being said, that's all my thoughts on credit and everything that you can do to improve your credit score. If you have any thoughts or questions, feel free to ask them down below. I'll answer any questions in the comments as soon as I can get to them. I hope you found the information useful. Thanks for watching. Have a good day.